Hey, good morning. This is Mayor Valensky with Driving Market. Let's kick off. Okay, so yesterday, as expected, the FOMC, the Federal Open Market Committee, came out with a pause on interest rates for their June meeting. Okay, well expected, built into the price, all priced in. There we go. But they didn't come out. What they did come out with is a statement saying that in 2023 there's going to be another two interest rate rises. There's probably going to be more in 2024. Now, where's all the analysts and all the superstars? I said earlier on my Reels, Instagram, and my TikTok, and the shorts that I've done, that the analysts are paid millions of dollars a year, and yet they came out with some cocky pop, whatever, bull, a couple of months ago that rates are going to fall in the US by the end of 2023. On the basis of what did they make that statement? How can they make such a ridiculous statement? And immediately I put out there that rates are not going to fall. I've stated over and over again, rates are not going to fall in 2023. Whoever thought that on Wall Street or in the UK or in the Europe or Japan or whatever, rates are not going to fall. Okay, rates are only going to go up in 2023 in Europe, in the UK, and in the US. Probably Australia and probably Canada to add to the list. Core inflation, as I've said over and over again, is burning hot. Core inflation excludes food prices and energy prices. Why? Because in any circumstances, whatever inflation's at, you're always going to buy food. And what else? Obviously, energy, because you need to heat up the food and heat up your house and do whatever else you need to do with energy. So those two things are removed from the core inflation measure. Now, what's likely to happen is that the markets are likely, as the fear of rates rise, are likely to come off. At the moment, stock markets in the US are being held up by this AI frenzy, this artificial intelligence frenzy, where every chip maker and every tech company is coming out with another announcement how their AI is going to be added to the cloud, or their AI is going to be better than their competitor. If you were to remove the AI craziness from the markets, then you'd have the markets going down. So the tech sector is held up. Now that tech sector is likely to move on further, because whenever you have frenzy or FOMO, fear of missing out, or the most ridiculous approach to stocks, then there's not much you can do to fight it. Fundamentally, these stocks are overpriced, completely overpriced, well overpriced. In fact, the Dow, the S&P, and all the other indices are overpriced. However, when you've got the masses or the sheep following the herd, and you can't really contradict them simply because they're only interested in one thing, in emotional buying of a particular stock. And that's where we're at the moment. If you look onto other parts of the market, you're going to have another regional bank crisis that's brewing. Okay, another $1 trillion will be wiped off valuations, or completely wiped off, not even valuations, completely wiped off by the end of the summer due to defaults on commercial property in the US. Regional banks are going to be in trouble again, and who's going to bail them out? In fact, some of the banks have already been downgraded by the wonderful analysts on Wall Street. And what you're going to have is another banking crisis brewing, and by September it's going to come, or September, October, it's going to come to fruition, where the Fed and the Treasury is going to have to take further action. And we're not talking about a few billion here now. You're going to be talking about $5 to $6 trillion worth of damage on the commercial property sector. Westfield in San Francisco, as I mentioned yesterday, is effectively gone bust, and the landlords have stopped paying the mortgage, which means one of the regional banks, whichever one it is, or the regional banks that are supporting that particular operation, can now wipe off that money, another loss, and you're talking several billion. Remember, when a commercial property goes down, all the ancillary services around that particular property also go down. So the supply chain is impacted and affected on a wider scale. Moving on to the rest of the markets. Have you had a look at Japan? Japan is a real, true bull market. They've got a cheap currency, which is dropping against the pairs continuously since the beginning of the year. It's moved up 102% since the pandemic. It's got low inflation and zero interest rates. That is a true bull market, and that's going to continue rising. So the Nikkei Dow looks like a good investment, whereby the US is a technical bull market and not really a true bull market because of high interest rates and obviously high inflation. So those are the things that do not make it a true bull market, but Japan is a true bull market, and Japan will continue rising throughout 2023 if anyone's looking for a particular good investment. If you're also looking for investment, if you're a forex trader, you can look at dollar yen. Dollar yen is going to go to 145, 150. Went up to 150 at the end of last year, beginning of this year, and it pulled back. Now is another opportunity to get in with dollar yen. It's going to continue rising because rates are not going to go up in Japan, and therefore the currency is going to remain weak. That's one for foreign currency. Bitcoin struggling at 25,000, 25,500. If it breaks below 25,000, which it could well do, you're going to see it going all the way down to 22, then to 19,000. Those of you who are crypto traders. Oil came off due to fears of recession, rising interest rates. Rates are going to go up next week in the UK by at least 25 basis points. Pound is strong. I did say that pound's going to go up to 127. It's there more or less now at 127. If rates do go up and the prospect of rising interest rates in the UK, you see the pound go to 128, 129 against the dollar. That's more or less it. Don't forget, I've written a book on Amazon, How to Start Your Own Business. I'm writing another book now on trading. You can share, subscribe, comment, get the channel going. I know it's basic. I know it's raw. It hasn't got all the wonderful editing like everyone else has, but let's get it kicking. Have a good day. Mayor Valensky, Driving Markets. Anything said in this piece is, of course, an opinion only. Catch you later.